Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a CEO suddenly leaves? Hint, it's usually more than just moving on to pursue other opportunities. Today we're diving into a recent Form 8K filing from SmartRent Inc. and it's all about big changes at the top. Buckle up, because this report has a surprise CEO exit, a quick replacement and some interesting financial details. So what's an 8K? It's basically a corporate RO report. Companies file it when something important and unexpected happens that shareholders need to know about quickly. This one from SmartRent is dated April 10, 2025, but the earliest event it talks about happened the day before. First up, we have a press release about the preliminary financial results for the first quarter of 2025 that ended in March. It looks like SmartRent wanted to quickly get that information out to investors. This is pretty common when there is a new CEO coming into a company. Now for the juicy part, the departure of the CEO, Michael Shane Paladin, the president and CEO, is out effective April 9, 2025. He also resigned from the board of directors the same day. It's worth mentioning that a sudden exit like this, especially when it's reported so quickly, often means there were disagreements or performance issues behind the scenes that the company isn't publicly disclosing. The interesting thing is the board already had a successor ready. The company moved fast and appointed John Dorman, the chairperson of the board, as the interim president and CEO. So the board chair is stepping in as the temporary boss. Dorman has been on the board since August 2021 and became board chair in July 2024. He has a long history in tech and finance, including being CEO of Digital Insight Corporation and holding a senior role at Oracle. Dorman's background seems solid, but taking over as interim CEO is a big ask. It usually means the board is scrambling to find a permanent replacement while trying to keep things stable. The filing states there aren't any special arrangements or family connections that influence Dorman's appointment. Everything looks clean and straightforward on the surface. Let's look at Dorman's compensation. His offer letter says he'll get paid $54,166.67 per month as base salary. He's also eligible for a bonus and will get some company stock. The deal is set to last until a permanent CEO is found, but no later than the end of June 2025. So it seems like the company hopes to find a new CEO relatively quickly, or at least have the search done by the summer. The stock units he's getting will vest or become fully his in 2027 on the last day of his term as a member of the board. It's not unusual for companies to offer things like this to people in Dorman's position. There's a clause to protect Dorman from some pretty hefty tax penalties. This is triggered if he gets any payments that are considered parachute payments. Parachute payments are basically big payouts that executives get when a company changes hands. Now, what about the outgoing CEO, Michael Shane Paladin? The company and Paladin entered into a separation agreement. In exchange for signing a release of claims and agreeing to certain restrictions, Paladin will receive a payment equal to a month and a half of his base salary. He will also be offered an advisory position, working up to 10 hours per week for up to 3 months. And he'll get a payment to cover a few months of health insurance. He will also be paid for his advisory service. The company issued a press release about the CEO transition, which is included as an exhibit. It's important to note that the information in this press release is furnished, not filed. This means it's not considered official for liability purposes under securities law unless the company specifically says it is in another filing. We also see a list of the exhibits attached to this report. Exhibit 99.1 is the press release and Exhibit 104 is the data file in a special format called Inline XBRL. This is how the company submits its financial information to the SEC in a machine-readable format. Now let's step back and look at the bigger picture. A sudden CEO change always raises questions. Was the company not performing well? Were there disagreements on strategy? Was Paladin poached by another company? SmartRent isn't saying, but investors will be watching closely to see if this transition affects the company's performance. Dorman's appointment as interim CEO suggests the board wants someone familiar with the company to steady the ship while they search for a permanent leader. His background in tech and finance could be helpful, but he's only in the role temporarily. The clock is ticking for SmartRent to find a long-term CEO who can drive growth and innovation. One thing to look out for is the next quarterly earnings call. Analysts will definitely be pressing the new interim CEO for details on the company's strategy and outlook. Any uncertainty or lack of confidence from Dorman could send the stock price tumbling. SmartRent operates in a competitive market, providing smart home technology for rental properties. The company faces competition from established players. A smooth CEO transition is crucial to maintaining its competitive edge and continuing to attract new customers. In conclusion, this 8K filing reveals a significant leadership change at SmartRent. While the company is presenting a united front, the sudden departure of the CEO raises concerns. The appointment of an interim CEO provides stability, but the search for a permanent replacement is now a top priority. Investors should carefully monitor the company's performance and communication in the coming months to assess the long-term impact of this transition. Thanks for watching Corporate Decoder. If you found this analysis helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.